third quarter corporate earnings reports here in Korea appear to have beaten the odds, with better than expected profits as exports regain tangible ground. So what are the numbers saying about Korea's economic prospects? And what is the latest assessment by Fitch with regard to Korea's sovereign rating? Also, is Korea's October inflation a cause for concern? Welcome to Issues and Insiders. Today we delve into Korea's most recent economic numbers and their broader implications. For this, I have Professor Kim Yong-Jin at Sogang University live on the line. Professor Kim, it's good to have you with us.
Good afternoon.
I also have Director Jeremy Zook at Fitch Ratings live on the line as well. Mr. Zook, it's an absolute pleasure.
Good afternoon. Great to be here.
Right, Professor Kim, Korea's exports in October posted an on-year expansion for the first time, I believe, in 13 months. Let's begin with the significance of this latest performance.
Well, as you mentioned, Korea's export grew a 5.1% in October, showing a growth trend for the first time in 13 months, which is a very good news to Korean economy. According to the Ministry of Trade, Industry and Energy, Korea's export in October was $55.9 billion, up 5.1% from the previous year. Korean export has decreased since October last year, but in this October, shifted to positive for the first time in 13 months. For this performance, we may pick up three keywords: semiconductor, China, and the U.S. Semiconductor export, last month recorded $8.94 billion, 3.1% down year on year, but the reduction level fell to the lowest this year, which was 40% in the first quarter and 34.8% in the second quarter and 22.6% in third quarter. Korea's export to China recorded $11 billion in October, a 9.5% reduction year on year. But again, it is the smallest reduction this year. Finally, export to the U.S. recorded $10.1 billion, which is the highest number for October. How significant is this performance? Well, Korean export are being in the process, of recovery, definitely. But it is hard to say that it would be a full-fledged economic recovery at this moment. There are many risk factors, such as a sticky inflation, war between Russia and Ukraine, war in the Middle East, which may cause, a lot of uncertainties to Korean and global economy together. So at the moment, we have to wait to see what will be happening.
Right. And in the meantime, though, let's go back to your mentioning of the U.S. market. I understand the exports of autos, that is, to markets like the U.S. actually led the expansion in our overseas shipments for October. That being said, Professor Kim, could you share with us a bit more details about Hyundai Motor's third quarter earnings?
Yeah, it is also a good news, right? Hyundai Motor Group, set a historic sales record in the U.S. electric vehicle market. According to the Hyundai Motor Group, the combined car sales of Hyundai Motor Company and Kia Corporation in the U.S. reached 125,693 units in October, a 2% increase year on year, which is the group's best ever performance for October. They're experiencing the on-year sales growth for the 15th consecutive month. Now, Hyundai and Kia sold a combined 20,834 eco-friendly vehicles, including electric vehicles and hybrid electric vehicles in the U.S., marking a 29% increase and from the year earlier period. In addition to that, recreational vehicles that is favored by American also performed very well. The combined sales of Hyundai and Kia recreational vehicle models was 93,830 units, or a 5.5% increase, accounting for 74%, 7% of their total sales.
Right, I see. And staying with corporate profits, Professor Kim, I hear that Samsung Electronics also performed quite well in the third quarter. Could you tell us a bit more about that?
That's right. That's right. As you mentioned, just like Hyundai Motors, Samsung Electronics also performed very well in the third quarter. According to Samsung Electronics, their performance in the third quarter was excellent. There's highest quarterly profit for the year. Problem is that it was the lowest in the past 14 years. The company reported a revenue of $49.8 billion and an operating profit of $1.8 billion. The performance was driven by robust sales of OLED display panels and high-end Galaxy series smartphones. Compared to the third quarter of 2022, both revenue and operating profit decreased by 12% and 77% respectively. This downturn was attributed to weak demand for semiconductor chips and home appliances and TVs. Samsung's device solution business posted its first ever loss in semiconductor division's history at $2.77 billion. This means that we may have to wait a little bit more to see the recovery or full recovery in the semiconductor business.
Right, I see. And in the meantime then, Mr. Zook, what is the latest assessment by Fitch with regard to Korea's sovereign rating?
Yes, well, we just affirmed Korea's AA- rating with a stable outlook in mid-October. So it's a relatively recent affirmation of that rating. And so what's the key driver of that? Well, we have seen a bit of an economic slowdown this year in Korea, as we have in many places. But our view is that Korea still has quite a lot of credit buffers in terms of external and public finances to sort of manage this economic slowdown and some of the challenges that come with that. So on the external side, we've seen Korea's current account surplus be relatively resilient. It did, of course, fall a fair bit in the early part of the year, but is recovering now, and we think those current account surpluses will sort of be sustained. Korea has very strong international foreign exchange reserves at the moment, and even though those have also come down just a bit because of just the broad U.S. dollar strength globally, there's still a lot of firepower that the Bank of Korea has to manage potential external volatility if it comes to that. On the fiscal side, we have seen over the period since the pandemic, a bit of a weakening in Korea's fiscal metrics relative to its AA peers. Korea is now sitting just above that AA peer median, but in overall terms, a debt level of right around 50% of GDP is still relatively healthy. And even though there's maybe a bit less fiscal space from a credit rating perspective, we think that there is still enough room for the government to maneuver and manage any sort of headwinds that they face.
Right, and staying with that, Mr. Zook, how do geopolitical risk factors, including, of course, North Korea, look to affect South Korea's future rating?
Yeah, no, that's a very good question. In the case of Korea, we do have we account explicitly for the risk that we see relative to North Korea. This is, we do it, somewhat bluntly. So we have our rating model outcome, and we lower Korea's rating by one level from AA to AA- to directly account for this geopolitical risk. And what we see is that in our view, geopolitical risk in the context of Korea is a bit higher than it is in its AA peers. And there's no other way to sort of make an account for that in our rating. So that's sort of how we approach it. I think in terms of looking at the outlook, we have seen, of course, tensions remain somewhat high over the past few years. But we don't, really see much in the way of direct rating pressures from the North Korea issue going forward, in the absence of a very, very significant rise in tensions, which is far from our baseline at this point. I think another thing to think about, and not just for Korea, but for the Asia-Pacific region more broadly, is just the rise in U.S.-China tensions that we've seen recently. And for much of the region, it's going to be a balancing act between, diplomatic and security interests with the U.S. Against sort of the economic interests that many countries have with China as a major trading partner. And Korea is very representative of that. And so, we're watching, and so far the government has seemingly done a good job of balancing those priorities. But that's something that we'll be watching in Korea as well as APAC more broadly.
Right, of course. And directing your attention, Mr. Zook, back to within Korea, inflation here in the country rose 3.8% on year in October, which I believe is the highest in 6 months. Should we be worried?
We're not too worried about sort of the recent rise in inflation. We see it as very much a temporary phenomenon driven by food and energy prices, particularly on the energy side. If you look at core inflation is still trending downwards. It's doing so somewhat slowly, but we think, over time that core inflation will come off, and we expect, a bit of moderation in headline inflation going forward. We have seen energy prices come off again in recent weeks. But, there are still risks if we do, to alluding to some of those geopolitical tensions abroad, see some of those, a sharper rise in risks around conflict and a rise in oil prices. That would, of course, put pressure on Korea's inflation rate. But, underlying inflation, again, we don't really see wage pressures in Korea in the same way that we do in many other advanced economies in the US or in Europe, for instance. And so that leads us to have pretty strong confidence that inflation will trend downwards going into 2024.
Right, hopefully, of course. But staying with consumer prices, Professor Kim, do you see Seoul's central bank perhaps raising its benchmark interest rate to perhaps curb October's spike in inflation?
Yes, Mr. Zook, mentioned, the Central Bank of Korea may not increase the, base rate. Even though it is a little bit, worrisome, absolutely, they cannot raise the base rate, for a while. There are 3 reasons to me. The first of all, the U.S. Fed decided its base rate, kept same at 5.25% to 5.50% due to potential, cooling down of the labor market recently reported, right? Even though the policymakers, continue to keep their options open for the, interest in base rate, hike. I see the rate hike cycle is, close to they're coming to the end. Secondly, last several months in Korea, the household debt increases, really, really fast. If the Bank of Korea raises the base rate, it will give huge burden on the household. So they might reduce their consumption, which in turn affect companies' bottom line negatively. And then thirdly, we still have lots of external factors, like I mentioned, war in Ukraine by Russia and war in Middle East, and also the response to climate changes. These all factors may give instability to potential to our economy. So it is not easy for the Bank of Korea Korea raised the benchmark rate.
Right, and beyond Korea, Mr. Zook, let's expand a bit upon something that Professor Kim mentioned. The Federal Reserve decided to keep its lending rate steady for a second straight session, underscoring a remarkably resilient American economy. Mr. Zook, how do you explain the economy's resilience?
Yeah, I mean, at Fitch, like many other research places, we have been sort of surprised persistently by the resilience in the U.S. economy, and we've sort of continuously been pushing back our forecasts of a recession in the U.S. as a result of the better than expected outturns. And I think again the recent GDP numbers from the U.S. and a lot of the incoming data just show that the U.S. economy is still holding up very, very well. Households don't seem to be responding as strongly as we expected to the rise in interest rates and the higher debt servicing costs that go along with that. And so our current forecast, our baseline from our September global economic outlook is still that we will see a recession in the U.S., a very mild recession, of course, by historical standards, and in the first part of 2024. But I think risks around that are certainly tilted to the upside, given just the continued strength that we've seen from U.S. consumers. And the U.S. economy more broadly. We are starting to see a bit of softening, of course, in some of the labor market indicators, but still the U.S. economy is holding up quite well relative to our expectations.
Right. And back on the Korean economy, Professor Kim, addressing the National Assembly last Tuesday, I believe President Yoon Suk-yeol was talking about his budget proposal. He also claimed that Korea's economic growth will surpass its potential rate next year. What does he mean, Professor Kim?
Well, what President Yoon claimed that the growth rate of Korean economy in 2024 will exceed 2%, which is regarded as the potential growth rate of Korean economy by all the experts and global experts. The expected growth rate, for the year is 1.4%. Which is very, very low compared to other OECD countries, including Japan. The expectation may be based, on two assumptions: base effect and the recovery of export. Korean economy has experienced a very sluggish recovery this year, and the growth rate is quite low. So next year, with the strong government support, if Korean economy comes back to normal, the growth rate will exceed 2%. In addition to that, semiconductor export will be recovered in conjunction with the strong shipbuilding industry and automotive industry. Then, absolutely the growth rate of Korean economy would exceed 2%. But it is hard to agree to that idea at the moment. We'll see.
Right, and staying with prospects about Korea's economic growth for next year, Mr. Zook, what factors look to fuel growth here in the country, and perhaps what factors look to hinder growth next year?
Yeah, well, we do see a recovery in Korea's economy going into 2024. We're forecasting at Fitch 2.1% growth next year. So Professor Kim has alluded to many of the drivers of that. We do see a recovery in the export sector, as the October numbers pointed to. We've sort of reached the bottom of the decline in the exports. The export recovery, while it will be there, is going to be somewhat gradual. We are still forecasting relatively slow growth in China, as well as in the U.S. So those will be a bit of headwinds. But led by the semiconductor sector, we do expect exports to slowly move upwards, and given some of the base effects, that will lead growth to be a bit higher. We also think that improvements in export should help to, at least boost slightly the investment side and see a bit more on the facilities investment going forward. Household consumption we see as improving, but being relatively subdued going into next year. Households are still dealing with, relatively high debt servicing payments, as well as a bit of subdued consumer confidence. And so we think that those will remain headwinds for much of 2024 until we get into a bit of the rate cutting cycle late next year.
Right, hopefully. All right, Mr. Zook, thank you so much for your time and your thoughts today. And Professor Kim, thank you very much for your insights.
My pleasure.
Right.
Thank you.
Well, on that note, we end Monday's edition of Issues and Insiders. Thank you for watching. See you same time tomorrow. That is Tuesday.